Hi there, welcome to the closing bell on the 17th of December. Things starting to heat up out there in market land, aren't they? If you've been following these videos, you should have a good sense of what's going on. Really starting to tip over now after the FOMC decision. We had the CPI came out earlier in the week. We saw markets take off on the excitement of inflation coming off the boil a bit quicker than people expect. And then we had the Fed pushing back on that, wanting to make sure that financial conditions don't ease too much while they're still trying to get on top of inflation. And also ECB coming out with a rate rise and also being quite hawkish. We had Italian bonds got absolutely hammered last night, which is an interesting development. So that hawkishness across the board in these central banks trying to rein in inflation. Inflation's still very high, but coming off the boil. It's an interesting setup. So we're still not through this yet. And as you've probably seen in the last few weeks, I've been showing you the setup where I thought the selling pressure would come in. And it is starting to take shape that way. So I just want to show you what the dominoes are like, lined up beneath the market, what could happen from here. And what needs to happen to change that? You know, if things do stabilize and turn back up, I'll give you a sense of where we can start getting a bit more bullish. But the way it's looking right now is I'm stepping back, and I've actually taken quite a few profits out of some long-term positions in one of my services during the week, basically raising cash levels, taking the biggest profits that we've made. And making sure that we can withstand whatever's coming next. So let's jump to the S&P 500 and see how things are looking. So this is the daily chart of the S&P 500, which we've been following quite closely. And I want you to note a few things on this. If we just go up and we're analysing that downtrend that's still happening. Last week we were looking at these waves, and this is the first thing we'll note is just trace out those waves, how this thing is developing. And we're, analyzing the most recent wave and saying, right, where should that selling pressure come in? And if we look, there's your sell zone of that wave. So during the week, we did end up having a spike. So after the inflation figures, we saw the S&P up over 100 points and went right up into that sell zone for the first time. And the selling pressure was there. And it sold off over the day, which made me a bit nervous. That's why I sold 4 stocks in that day between the CPI figure and the FOMC meeting, because it looked like the selling pressure was coming in at that sell zone. And when you're looking at it in the context of, the big waves down, the bear market that we've got going, it's like this could be the beginning of quite a big sell-off. So from that, we then had, prices being rejected again from that 200-day moving average. So that line there is the 200-day moving average, very important. And you can see that it's been rejected from there quite beautifully on the last wave. And we've just been trying to nudge above it over the last few weeks. And that's the rejection that happened on Thursday night, our time, with the S&P down 100 points. That has really been that rejection back through the 200-day moving average. And, really a lot of things just saying, right, the selling pressure's there. What happens from here is that it could start to set itself up for the next wave down. And really, you need to see prices back above that wave high, which is the most recent and highest point of the most recent wave, because if we're looking at that structure there, that is the most recent wave within that downtrend. So that's the point where really you're saying if it's back above there, things are looking different. So if we see the buying pressure come in, it manages to take out that level around 4,300 in the S&P, it's just changing things, isn't it? It could still end up selling off, but it's just weakening that whole idea of that downtrend, the strong downtrend that we're still in. So there's a good line in the sand there. We know we're seeing the selling pressure where we expected to see it. It's now, if we switch over to the weekly chart, on this weekly, you can see that we've got the 10-week exponential close to that 20-week simple. So it hasn't really flipped over into an uptrend yet, and the selling pressures come in. So getting that close below those two moving averages, that's around 39.30 is where those moving averages are. So, weekly close below there is quite bearish, saying that there could be the next wave coming. But we haven't got the weekly sell pivot yet, do we? But the way it's set up, because this is, so this week was actually the highest price. So whatever the low is this week, and you know more than me what happened last night in the States, could have had another bad down night, quite frankly. Whatever the low is of the week, it needs another close next week below that. But the way it's set up, it could actually be a bad week next week if this momentum really does turn down at a rapid pace. So it'll be interesting to see whether we do get how that weekly sell pivot really evolves. But, the weekly sell pivot isn't actually there yet. It hasn't been confirmed. So, devil's advocate, it could end up turning back up. And, that weekly trend to the upside hasn't actually been changed. So I guess that's one point to be aware of. But yes, everything really pointing to the fact that things could tip over back underneath those moving averages on the weekly. Basically, as you can see here, once it's tipped over, you've got a lot of selling pressure underneath there. Once it tipped over, lots of selling pressure. And once it tipped over here, lots of selling pressure. So that's really how it's shaping up in that S&P, looking a little bit dangerous for more downside. And just be aware that in these Christmas period times, it can exacerbate volatility. So I'm sort of hoping it dies off so I can go and have a nice Christmas break. But if there's no liquidity there, if the fundies have, lowered their positions and exposure, there's just a chance that when the selling pressure hits, there's not much buying pressure about, and the volatility over this Christmas period can actually be worse than usual. And we know, looking at the big picture, this is the weekly, there's your 2020 crash. We've got the huge recovery. We've got the sell-off going to the point of control. That's where the buying pressure came in. What was the high just during the week was, perfectly on the bottom of the major sell zone of that whole wave. So that's where you'd expect there to be selling pressure in the big picture. It was there. So now you're looking at, if it flips over, if we break through that point of control, that's when the panic really sets in. And that's when you can see a quick move down towards the buy zone of that whole wave. I'll start getting pretty excited about picking up bargains down there. And that's around 2,800 in the S&P. Where are we now? 3,900. So, you're looking at the potential, if everything takes shape, of a 1,000-point move to the downside. Now, can I just call that? It's a big call, but just looking at this whole structure, this is how it's looking if, and it's a big if, the low of the whole correction gives way. So it's still a long way from there, but this is a sort of dominoes that are set up, big dominoes, which you don't often see. It takes a long time for this sort of thing to take shape. So moving on to our market, and things starting to take shape now. Again, I'm talking to you as if you've been watching these videos, and if you haven't, go back and watch a few of them to get a sense of what I've been discussing. we're looking at these waves and saying these moves sort of back to the sell zone, even though these ones really, this one went all the way back to retest the high. But just to give you that sense of large waves, which see large corrections of the wave, which shakes everyone out. And so we're, analyzing the most recent wave to the downside, you can see there. And this is what we've been talking about, isn't it? Where we've got the large wave to the downside. We've got the retest of the point of control, selling pressure down into the buy zone, where we get the reversal, which has seen a rally all the way up into the sell zone. And, for weeks I've been saying, watch out, because this is the area where I thought things would turn down. And a few weeks ago had, beware the bull trap when prices were here. And I gave you this range as the area where I thought the selling pressure would eventuate. And look at how it's taken shape. And this week will be the weekly sell pivot. Didn't get confirmed last week, and this week it will be confirmed. And I was showing you, we're also looking at the ABC formation. So we have that wave, we have the A leg there, have the B leg down here, which doesn't go lower than A. Then we have the C leg here, and then I'm waiting for that overlap of A, this point here. Once it fails below there, that's when you're saying, right, this could be the next wave down from this major wave. And it really is starting to take shape. Weekly sell pivot here, so any rally I'll be looking to sell, and it really should take shape like that. And from here, really back above that high, look, maybe we could have a little retest and failure, but I wouldn't want it to go too much higher than that. And really, the all-time high is my line in the sand. If things can hold in there and go above there, everything for me switches. I'm happy to turn bullish. The long-term trend will probably be turning up. But just the way it's looking, it's fairly dangerous. So let's have a look at the daily. But looking at this daily, I just wanted to point out the 200-day moving average. So again, there's that line there, and you can see we've managed to pop above it. This is where the Australian market's been outperforming. But note that the selling pressure came in, and that there's that 1 and 2 standard deviation Bollinger Band above the 200-day. So note that the selling pressure has come in around there. And if things overlap, again, similar to that ABC, going back under the 200-day moving average is where things can really tip over. And similar to the US, back under the correction low is where things could seriously tip over. So that would be clear on the monthly, which I'll switch to now. So looking at that monthly, the big picture, you can see that we are still in long-term downtrend. It's been a big correction from the high. So we've had that wave down up into the sell zone of that wave, and then back under the 10-month exponential. Yeah, again, similar situation. There's lots of things pointing to the fact that back under around 7,000 is pretty dangerous for the market. And the huge line in the sand is, below that low of the whole correction. And that is the area below which you'd be saying, well, watch out. This is where the panic sets in, and where you want to be stepping up and starting to look for some bargains will be once we get that failure. If it does happen, you're looking down around that area, the buy zone of that whole wave up after 2020. That's where you're going to start looking for some pretty good bargains, especially in line with the very long-term uptrend, which I think I've shown you in the past. Of if you're looking at how this market's moved, and this is not trend lines, this is more a linear regression idea of just how prices have moved. That you're if you've been a buyer anywhere near that area, so any sort of move down there, you're going to be looking to get long, aren't you, based on that very long-term sort of channel, bottom of the channel of how our market has moved. So that's sort of how I'm seeing things. It's going to be interesting what happens from here. I think our government trying to nationalise the gas industry and is just insane. Who knows what repercussions are going to come from that? I just am quite amazed by what they've done, and there'll be lots of unintended consequences. But just purely technically, looking at this is like, well, this could be a starting gun for this next leg down. It certainly looks that way from a technical level, and it's something I've been sort of warning you about for quite a while. So hopefully you've taken the opportunity to lower a bit of exposure just so you can see how this plays out. Because, if you were freaking out in June and wondering why you were so long stocks, well, now you've been given an opportunity to, just lower things a bit and sit back and see how this next few months plays out. I think 2023 could be quite exciting if we do get a big clear out. The Fed will freak out at some point if we move into a recession. The pivot will happen. They might start lowering rates faster than everyone expects. This is how it usually plays out. So, just be wary, I guess, over the next few months. Enjoy your Christmas. Don't be trying to make too much money in this market. It's going to be difficult, but be prepared to take advantage of some big opportunities that will be coming next year. All right, well, that's enough. I will come back probably with one more next week, and I will chat to you then. Cheers.